I think we'll go ahead and get started. One weird logistical thing I'm noticing, I'd sent out an email reminder for the session this morning. The Zoom link I sent out, I think, was specific to me. So anyone who used that is actually logged in as Adam Jesperson. So I'm actually logged in multiple times. If you wanted to change that, you can click on your screen. There should be the option of just going into your profile and changing whatever name appears on the screen and change it back to your own name. If you'd like, it's not a major issue, but just know that we have a lot of Adam Jespersons signed into the session today. With that, my name is Adam Jesperson, and welcome to MNA's Townhall nonprofit on an innovative way for nonprofits to raise funds. We are here with Andrew Connor, who is the executive director of the Center for Community Ownership, which is a Montana-based organization that's serving across the country. They're a new member of MNA, and we're very glad to have him here. He's going to talk about some financing methods that some of which are applicable to small business, meaning not a nonprofit corporate structure, and some that are applicable to nonprofit. Regardless, it's even if we're talking about financing structures that are available for small business, it's good for us to know that. It's good for us to have that information because we exist in communities across Montana who just having that information could be very helpful. We're glad Andrew's here. I will be monitoring the chat. So if you have any questions as we're going along, I think we're going to get to a spot where we're going to have some Q&A. So if it's not a super relevant question or a timely question that needs to be answered in the moment, hold off on it. But if you need to ask a question, put it in the chat. If you're having any problems seeing or hearing, please chat a message to me and I will get that taken care of. We are glad you're here. Andrew, we're glad you're here, and take it away.
Great, thanks so much. Glad to be here. So as Adam mentioned, I'm going to be talking about sort of two different things. One is going to be the work that we do in general as a Center for Community Ownership, which might be more appropriate for some of you who are working in the economic or community development realms. And then I'm going to talk some more about this Crowdfund Main Street Montana project, which should be applicable for everybody. So even if at first we seem to be going in sort of a little bit of a direction where you're like, oh, I don't know how relevant this is, just hang out for a couple minutes because the part that may not seem relevant shouldn't last too long. And then we'll get into the stuff that is a little more broadly focused as well. So first, like I said, I'm going to start with talking about the Center for Community Ownership. And basically I've spent the last decade plus in the sort of alternative economic development realm, learning about all sorts of really neat creative solutions that communities across the US have been putting into place in order to address some like really vexing economic development problems. And especially I've been really drawn to communities that are sometimes grapple with not having the resources that others do. So sometimes this is under-resourced urban communities or under-resourced rural communities or small towns. And I've really been drawn to solutions that kind of empower those places that are sometimes neglected or not really have such a good fit with some of the typical economic development approaches. So this especially holds true to places whose needs are not being served by whether it's corporate chain stores or traditional entrepreneurs or traditional investors. And this model of the community-owned business is one that I really felt kind of spoke to those places and is a really kind of a neat solution that prompted me to create the Center for Community Ownership to try to get the word out about this option as a strategy for community development, and also to bring this sort of technical expertise to the table for communities that want to do it. So basically there's two things that we kind of do as a community Center for Community Ownership. One is that we help places create new businesses, fill some sort of hole in their local economy. Maybe they're in the food desert, they don't have food businesses, they don't have a hardware store, they don't have a childcare solution, they have empty spaces downtown. Anything that the community wants to create that's new, we can help them form a community-owned business to sort of fill that niche to bolster their local economy. So that's the one half, is creating something new. The second one is that we help transition existing businesses into community ownership. So as many of you probably know, there's a huge number of businesses that have retiring business owners or business owners that want to transition or move away. And it's just such a tragedy when those businesses are lost. The tax revenue is lost, the jobs are lost. All these things are lost when these businesses close. And many of these can be saved using community ownership. So similar thing, instead of starting something new though, it's transitioning existing businesses into community ownership. So just sort of a really rough breakdown on how we do that. We create sort of a new entity, this community-owned enterprise. Individuals in the community capitalize it. So they put the money in small dollar amounts, basically aggregate this kind of idle local capital, which is around in even the smallest communities that kind of can grapple with some of these issues. There's usually capital around. If necessary, we can pair it with outside investment, like an angel investor or something like that, if needed. Doesn't have to be that way. It can also be paired with conventional financing, like a loan from a bank or a CDFI or something like that, to put together enough capital into this entity to then either start up a new business or purchase the existing business. So I always say if it can work as a business, it can work as a community-owned business. The only difference is where the money is coming from. So basically, if it's viable, it can be started up as a community-owned business. If it's a going concern currently, it could be converted to community ownership. There's no real limitations on what sectors or whatnot the model can apply to. It can be retail, it can be an online business, it can be anything that the community is mobilized and motivated and invested in making happen. So one of the main ways that we achieve that, sort of the primary mechanism that we get all this capital together from small dollar community investors, is through investment crowdfunding. And I'm going to zoom out just a little bit here and give you kind of like an overview of how that came to pass and what it is and things like that, because that's a term that not everybody's familiar with. In the aftermath of the Great Depression, so many years ago, there was all this investment fraud and swindling and stuff that was happening, where people were putting ads in the newspaper like, oh, invest in this thing, and people would send them their money, and there was just all this outright theft and corruption that was happening. So they passed all this well-meaning legislation to try to prevent that kind of fraud from happening. And one of the big things that they did was they said, okay, if you're really wealthy, if you have a really high net worth, or you make a ton of money, we think that you're smart enough to take care of yourself and not get bilked in an investment fraud scheme. So they put all these restrictions that basically, unless you're really wealthy or have a really high income, you can't invest in things willy-nilly. You can basically only invest in the stock market. And this was well-intentioned legislation that, responded to a totally reasonable risk. But it had the consequence of, for the next, so many years, it created two really big issues. One, businesses in their communities, businesses could not go out to their communities very easily and raise money from the places around them. They were really dependent on financial institutions or really wealthy individuals. And two, average community members could not invest in the businesses that are in their places. So if the coffee shop wants to expand, they can't just put the word out, hey, community, we want to expand. That's actually illegal for them to do, to just broadcast generally, hey, we want you to invest in us. So it was this real barrier where people couldn't invest in their communities and business couldn't access capital from their communities. And in the aftermath of the housing crisis and the financial collapse of 2008, 2009, they tried to rectify this. So it was possible to do it, but it was a real burden. So basically, they included in the Jobs Act this legislation to create the category of investment crowdfunding. And that was meant to sort of democratize investment and tear down these barriers to investment. And this means that it's so much more possible for people to invest in local businesses and organizations. And so it created investment crowdfunding. So what do we mean by that? You're certainly probably familiar with this category of traditional crowdfunding, or what we call gift or reward crowdfunding often. So this is like Kickstarter, Indiegogo, GoFundMe. And this is basically somebody wants to do something and they're just saying, hey, who thinks this is cool? And people say, we think it's cool, we'll just give you money. And we're not really expecting anything in return. Maybe we'll get a t-shirt, or maybe you'll put our name in the credits or the liner notes, or we'll invite you to a party, or we'll send you a postcard or whatever. But it's basically that kind of it's a support for the feeling of supporting it. And very importantly, They can't be any financial return. It's not an investment. You can't sell a part of your company. None of that is a part of traditional gift crowdfunding. But this legislation created this new category called investment crowdfunding. So the big distinction here is that you can say, hey, I'm going to sell shares in my business. I'm selling 20% of my business. These are the share prices. This is how much you own. This is what comes along with it, the economic rights, the governance rights, the control or no control, or you can borrow money from your community. We're trying to raise $500,000. We're offering it at 4%. This is the terms, and people in your community can actually participate through a platform like a Kickstarter, but it's actually something that can have financial returns. So those are the two big differences in terms of the nature of those things. And another big difference is the kind of scale that it allows. So the average successful gift crowdfunding campaign is about $7,000. The average successful investment crowdfunding campaign is $250,000. So it's a totally different scale when you start offering financial returns. And this just speaks to, like, if you're a business that needs to seriously raise money, going on Kickstarter is a tough way to go. But going on an investment crowdfunding route actually legitimately can help you raise the kind of amount of capital that you want. So we use that, the Center for Community Ownership, to do those two things that I was talking about earlier. We use it to help raise money to start these new community-owned businesses, and we raise money for the community to purchase and transition existing businesses into community ownership. So that's my quick capsule summary of what we do for Center for Community Ownership and how we do it. And that crowdfunding part allows us to transition into this next part, which is about Crowdfund Main Street, Montana. So I talked about these two different categories of entity here. And Crowdfund Main Street is our partner who we work with, they're an investment crowdfunding platform. And we always say, these ones that you see here, Fundable, WeFunder, Crowdfund, a lot of those, we call them like the Walmart of investment crowdfunding. It's kind of like they're big players. You pay the money, you get up on the platform, but it's like you're sort of just a number and there's not a lot of personal attention and they don't really care. Crowdfund Main Street is a very community-oriented, values-driven kind of boutique investment crowdfunding campaign. So they're really invested and participate in the success of their clients, and they really, they're a great partner. So that's why we work with them for our community ownership projects. And this is just a quick shot of like their website. And this is sort of like what it looks like every investment raised. These are folks that they've worked with who, you have a page on there. It's got all the details of the investment offering, et cetera. This is just kind of what it looks like. So they're really great partners. And I was talking to them just months ago, and we sort of decided it'd be really cool to collaborate. They work nationally, like we work nationally, but as Adam said, I'm based here in Montana. So we thought it'd be really cool if we got together to create Crowdfund Main Street, Montana. So what that would be is basically a similar portal like this one here that they service people who are all over the US. But Crowdfund Main Street, Montana is an entity that will only host offerings for businesses and organizations that are based in Montana. So our goal here is we want to get businesses and organizations that are interested in raising money from the people of Montana. And we want to create a community of investors in Montana who want to invest in the businesses and organizations in their state. So in this case, this is the part that broadly applies to everybody. And this does not have to be people who are interested in full community ownership. This could just be the hardware store that needs to raise capital to purchase a new building or purchase some equipment, or it could be a nonprofit that's trying to establish a new program and they need funding to make it happen. So any for-profit business can offer equity, that is shares of ownership. They could sell part of their business over this platform, or they can borrow money over the platform. Like I said, they could say, we're borrowing $200,000 at 3% paid quarterly. These are the terms, and they can raise that money from the community. As Adam reiterated, and as you all certainly know, nobody owns a nonprofit, so you can't sell equity, you can't sell shares of ownership, but you can raise debt. Nonprofits can raise debt through community ownership. The important thing that I want to just sort of point out up front, just in case it's obvious, it's the same as in the sense that you do have to pay on it. You know, you set your terms, and often those terms can be more favorable than what you would get from a conventional institution, because you just need to make the case to the community. You don't need collateral, you don't need a personal guarantee, you don't need to prove to their algorithms that things can work, but you need to demonstrate to the community that you have a plan to actually pay back that money on the schedule that you commit to. So I just always feel it's important to reiterate that. It's not like you just raised $500,000 and it's like, great, we just got $500,000 for nothing. You know, it's like you still have to pay 2%. So you'd better be raising that $500,000 as a part of an overall revenue strategy that you're actually in a position to pay that back. So I just want to make sure to mention that, so there are no illusions about that. So yeah, we would, like I said, create a platform that sort of would be a sub-platform of Crowdfund Main Street, or we will, I should say, because we are in process. And part of the big goal here is that obviously in Montana, we know that there's centers of capital, right? There's places where there's wealth concentrated in the state. And part of what we want to do is make it so it's possible for people from all over the state to access this wealth, so that it can actually flow from those centers of capital out into places that don't have the biggest concentration. So if you are a hardware store in Malta and you need investment, you're not just trying to get investment from people from Malta. Obviously, that's going to be a big part of where you're reaching out to. But with this platform, we're hoping to connect people to, you know, folks in Whitefish and Bozeman as well, so that they can access bigger pools of capital to catalyze and grow businesses around Montana. And furthermore, these offerings would actually allow investment to flow from elsewhere in the country too. Again, obviously the target is in Montana, but if you have people who are connected to the business or the organization, or have people who have a connection to Montana, that investment money can flow from people outside of the state as well. So there's no prohibition about that. But our real goal is to be connecting capital to places that need it in the state of Montana. I just want to highlight one of our major legal partners is this woman named Jenny Casson, who's based in the Bay Area. And I just feel like we have a great team of like legal folks who, when we work on these projects, we bring all of the legal, financial, investment, compliance expertise, the campaign expertise, and all the support to sort of make it successful. It's a very like sort of turnkey thing that we offer. And, but Jenny in particular is one of the country's like, we're really very fortunate to have her involved. She's a real thought leader. She actually helped write that legislation that got passed as a part of the Jobs Act. She's a very accomplished person who's been helping entities raise money from their communities for years. She's worked with hundreds of clients. And it just, I just wanted to highlight her because I feel like we're very blessed to have her as a part of the team, and she's extremely accomplished. And yeah, so I think that that's kind of like the bulk of what I wanted to say before I open it up to Q&A. And yeah, I think I'll just stop there. I feel like there's one other thing I want to say, but I'm sure I'll remember it in the Q&A. So I'll pause there.
Thanks, Andrew. We have some questions that came in, and one of the big ones is just touch on the difference between a community business versus a nonprofit model. Mm-hmm. And is there the ability to do sort of a hybrid model? Do those exist? And then there's just some questions of, do you have any examples of nonprofits doing this, and what maybe a rate structure might look like, or what type of a project may be appealing for a project like this?
Right. Okay, so the first question was the sort of a structure question, right? Between
yep.
Like nonprofit versus for-profit. Okay.
Yep.
So I think that this is sort of part of what we do when we work with folks, you know, for starting from scratch. A big part of the kind of consultation is, which I'm sure many people have been through some process of this nature, is what is the right structure? What is the appropriate structure? And it's not only nonprofit versus for-profit, you know, even in the for-profit realm, you have all these questions about, okay, C Corp versus S Corp versus LLC versus, you know, there's sort of all these different choices you can make. And I guess the short answer might not be that satisfying of one, but it's sort of context dependent. You know, every situation, there are all those pros and cons you weigh, and depending on the goals and depending on the context, it kind of can tilt different directions. One of the reasons that I like, you know, for these community ownership projects, one of the reasons we tilt towards using this sort of for-profit, private, community-owned business model is that it's just the truth that the law is written in a way that allows those kind of entities more flexibility and more control over like any other entities in our system, because we have a system that's just sort of like oriented towards private capital and private business. So there's actually so much you can do in designing those, that even if it's that kind of model, you can build into your governance and in your documents all sorts of community control, community accountability. You can basically preserve a lot of the mission alignment of a nonprofit or a social venture type enterprise, while reaping the benefits of like the flexibility and the tax favorability and so forth of having that kind of for-profit structure.
Great. And I would just add to that too. Typically, one of the major advantages of a nonprofit organization is the ability to raise for fundraising, right? The tax exempt nature of donations. So if you have an organization that is heavily dependent on fundraising and maybe doesn't have much in the way of earned income programming, that's a good example where a nonprofit structure is better versus one that, if you have the ability to generate revenue from a service, or a program, that you've got more flexibility in the way you might organize.
Yeah, and actually, and there is a lot. I'll give this example. We're working on this project in Baltimore that is actually there's this community that struggles with a lot of blight and poverty that is trying to gain control over a commercial real estate corridor. So they're working on creating a community ownership model to purchase and run a community-owned business model to purchase and manage commercial real estate. And we're looking at all kinds of stuff about having like a nonprofit central core organization that then has for-profit subsidiaries for each of the properties. So we can sort of reap the benefits of getting grant support and donation support to kind of fund the mothership, while reaping the benefits of private investment and capital for those for-profit subsidiaries. So there's kind of no limit to the kind of creativity you can do when you're constituting those entities.
Thanks, Andrew. And that answered a couple of the other questions, which was just around, can you have sort of a hybrid model, which you mentioned, and knowing that grants are a concern, or the ability to raise money is a concern. So that's helpful. The answer is, there's a way to do it, but that way is going to be highly dependent on the individual organization.
And I try not to be too flip about this, because every once in a while you run up against some sort of limit, but there really is like a ton of flexibility. There's a lot of leeway for designing and making those things fit. And we have such qualified legal folks that they're very good at like making sure you do that in a way that's not setting you up to run afoul of some law or regulation.
So Andrew, could you maybe give us an example of a type of a project that you think will be a good project for a nonprofit to put up on the Crowdfund Main Street Montana portal as something that, and what just mechanically what that might look like?
Yeah, sure. So the short answer is, I would say for a nonprofit, I would say that the real criteria are you raising money? Are you basically taking out a loan that you can afford to pay back? Is sort of the first question you should be asking. The second one would be probably the only other main one would be, is this something that you feel like it's realistic to get the community motivated and excited about? And that excitement is a combination of both the social return and the financial return of the project. We are, generally speaking, not targeting big venture capital, institutional investor types who are really like, it's all about calculating the bottom line. It's like most people who I think are going to be participating in this are going to be interested. They want to participate because they want to support, and they are, the financial return is going to catalyze their participation. They're not going to be driven strictly because this is like, they're going to retire on this money. You know what I mean? I think it's more like, oh, I have some money in a savings account that's earning, 0.05%, basically nothing, just sitting there. I can invest in this thing that some entity in my community is doing. I can make a better return and support this project that I feel really good about. So I'll give you one example. So, this is what I forgot to say. So in order to launch the Crowdfund Main Street Montana platform, we need a minimum of 3 committed projects, and we have 2. So we're looking for basically our third one to be able to hit go and launch the project. And one of those 2 projects is actually a nonprofit, and they're an entity that is working on high-speed rural broadband access. So this one that like they have a revenue model that they believe that they're going to be able to pay out on money that they borrow. And it's something that they think they're going to be super excited to get people involved in, because it is exciting, right? It's purpose driven, it's neat, it's tangible, like it's really valuable. And as far as the actual rates, like I said, that's going to be very situational, but I think generally speaking, you can realistically ask for rates that are more favorable than like I said, you'd get at a bank. I mean, we've been talking about stuff in the kind of 2 to 4% range. And like I said before, the terms of the repayment, you could set it monthly. You could make payments monthly. You could make payments quarterly. You could make payments annually. Packaging that is also something we kind of walk through clients with to figure out what's the proper offering, both from your standpoint to make it viable for you and also to make it sort of attractive to the community. So finding the right balance there of how you design that offering. So that was one example. I think that you asked for an example, right? So that's one example of like a thing that we're talking about. But I kind of think I wouldn't be too hemmed in by that. Sort of like, in a way, there's a real parallel to a nonprofit doing a capital campaign or trying to do like, solicit donations for something. But it's just kind of, it's cool because you're not just saying, hey, donate to this. You're saying, hey, become a real investor, become a real partner with us. And you're not just giving us money, you're actually benefiting in the process by earning a return on the money that you're lending us.
Thank you. A couple logistical questions. Once this launches, how do people find out about Crowdfund Main Street Montana? And what's the fee for crowdfunding in Montana, or what's the fee to the center for an organization that wants to be involved?
Yeah. So that first question actually speaks to one of the reasons why we're excited about this, because if you're just like an individual business or entity trying to raise capital, it might be a little hard to get sort of earned media or attention. But we're hoping that with the launch of this, we're going to be able to get attention because this is a big, broad statewide thing. So if you're a nonprofit, in Great Falls, you might not expect that your thing is going to show up in the newspaper in the Missoulian. But if it's a part of Crowdfund Main Street, and we're definitely going to do a big publicity push for the platform itself. So we're hoping to reach investors all over the state who are therefore hopefully, like I said, going to find projects that they might be willing to invest in, even if they're not in their immediate local communities. So that's going to be an ongoing thing of trying to drive attention and drive traffic to the Crowdfund Main Street Montana platform in general. And we hope that just as there's more people come in for one investment, they see the other investments as they invest once, and we have new offerings that go up on the platform, we'll send out word to them, we'll build up a community that like I said, we can hopefully tap for kind of ongoing exposure and so forth. And then the second question, the fee structure. Okay, yeah, so that's really an important aspect of this that's also pretty cool. Those folks who are part of our partnership with Crowdfund Main Street and Jenny Caston, who I put up there, they're really interested in getting this off the ground. So they're really steeply discounting their services for this as well, which is something that's pretty cool. So the general fee structure as it stands, and there can be some tweaks in this that are a little bit situational, but there is a $5,000 upfront fee to participate. And that covers all the costs of, again, that legal consultation, the financial consultation, the preparation of all the investment securities offering stuff to make sure it's compliant, the posting of it on the platform, and full campaign support and strategy and writing support and content writing support and publicity and PR kind of throughout. So there's a $5,000 fee upfront for that. The way that these platforms stay alive and the way that they pay for their operations is that they take a percentage fee out of everything that's raised on the platform. That's pretty standard across the board. The fee for Crowdfund Main Street is 6% of the total raise. And then the final fee that is a part of that is that we also take $15,000 out of the final raise. So that's paid on the back end. So that's not money that has to be paid up front. It's effectively money that is sort of like paid by the community. So the three parts of that, again, $5,000 up front, 6% out of the total raise, and then 15,000 off the back end. So if you want to walk away with, and that's the other thing I guess I should mention. Our minimum raise size to sort of make it worth it at this point is around $100,000. That's where the kind of costs kind of balance out. So that's just something to keep in mind too. If it's a little bit under that, would still be interested in talking about it, but that's sort of like roughly the threshold where it's sort of the amount of time and work and effort that goes into it kind of becomes worth it at about $100,000. So that's just something I'll put out there too. So let's just say, for example, somebody is raising $100,000. They would, just to break down the fees, they would pay $5,000 up front. They would want to walk away with $100,000. So the amount that they would put on the platform is $100,000 plus the $15,000 on the back end, and then plus 6% on top of that. So I'm not sure exactly what that ends up at, but basically 115 plus like 120 something thousand is what the raise would be to then walk away with 100,000. So hopefully that's clear. Sorry, I know I kind of jumped all around on that, but so.
That's clear. Thank you.
Yeah.
So devil's advocate,
Yeah.
what does defaulting look like if things go poorly? You raise the money, but you're not able to pay it back. What does that process look like?
Yeah, so it would be, so there are no liens. The law, I guess I don't know the details of the law in Montana as it stands, but basically, debt holders are first in line. If there's a bankruptcy or if there's a liquidation, debt holders are first in line. But this is sort of another part of the entity consultation, is structuring it so that there's no personal liability on the part of officers of the organization or owners of the business or whatnot. So those debt holders still have like a legal claim, but yeah, there are no liens against people or individuals or personal property or so forth like that.
Is it possible, and this, I didn't ask you this question before, so I don't know what the answer is, but is it possible to sort of build in some debt forgiveness into an ask like this, knowing that it's a nonprofit type of a project? Are there some mechanisms or some levers you can build in where if X happens, it becomes forgiven and turned into a donation?
That's a great question. I don't know the answer to that. I'm sure our attorneys do. And again, the kind of short answer is probably, because there's a lot of flexibility with a lot of this stuff. But yeah, I don't know. I don't know the answer to that.
Perfect.
That's a great question. And folks can also feel free, I don't know, Adam, if there's more in the chat there, but people can feel free to, to just unmute themselves and ask questions as well if they would like.
Yeah, feel free if you'd like. There are some more in the chat. I was just going to ask one about kinds of assets that participating organizations seem to have. So when you threw out the $100,000 number, it's a pretty big number for a project for maybe a smaller nonprofit in Montana. So typically, what kinds of assets do you see organizations having that are?
I mean, it really depends, because and again, I don't mean to be too sort of flip about this, but it's like, even a small nonprofit, if they've got a really solid plan to put $300,000 to use, like that'll allow us to purchase this building, open up this service, earn this kind of revenue, and it's a well-vetted business plan, even a tiny nonprofit could make that work. The scale of and even a huge nonprofit could have a terrible plan to use $300,000 and not be able to pay it back because they don't invest it in the right way. So I think I would just suggest that it has more to do with what the funds are being used for and how they are part of the overall kind of like revenue generating structure than the scale of the organization itself.
Thanks. That's helpful. And I think that goes to the baseline of all of this, which is, this is an option for funding your organization. It's another avenue for capital. And maybe it's one that, it may be easier to go out and get $300,000 for a certain project than it is to sort of beat the street and try to raise that in donations. So it may give you faster, easier access to a larger amount of capital, which you've made that point. I think that's a good one for us here.
And the part that I like about that is like, I mean, I don't want to just like poo-poo like banks or financial institutions or whatever, because they're just doing their due diligence to try to limit their exposure and limit risk and so forth. So that's, you know, that's what motivates their vetting. But there are plenty of totally valid, viable, financially defensible kind of like projects that businesses and nonprofits can do that banks won't touch because they have, you know, some criteria that it doesn't earn enough of a return, or it falls in some category that's flagged in some way. And that's just like the empowering and nice thing about this is like, you don't have to persuade them to change how they do things. You can just go directly to the community and say, this is what we want to do. This is why we believe in it. This is the plan. This is how we're going to use the money, and this is how we're going to pay back. And if people are like, hey, sounds great, here's $10,000 at, you know, 2% or whatever, I'd love to be a part of that. Like it's a parallel exercise, but it's a different exercise than appealing to those institutional lenders and investors.
Love that. Feel free, folks, if you have a question, unmute yourself and feel free to ask or put it in the chat.
Yeah, and I just saw somebody in there, no grant reports. That's right.
Yeah.
That's exactly right. I mean, that's a big part. That's the same. I mean, yeah, that's parallel to the financial institution thing. I mean, foundations, like, I don't know if this is the right or the wrong crowd for me to go on my tirade about how foundations operate, but it's like, it's the same thing. It's like you're dealing with a gatekeeper and you're dealing with someone that you have to play their game, and where there's all sorts of compliance, and when you have to do it on their terms. And this is a way to, in a sense, go around that too, and go directly to the community and not have to subject yourself to that.
And I have a quick question, just a follow up in terms of the fee that you guys, and kind of if as an organization kind of finding out about this was interested in kind of vetting their idea with you, I mean, what's the appropriate steps in terms of, we have a big fee for service aspect of our organization, but we're very small, and we could apply the fee for service across the state with an online model.
Oh, great.
So it's intriguing, if a little bit scary.
Yeah, sure.
A little compelling because no grant reports, and I like fee for service models. I'm like a no debt person. I like making my money, spending the money, making the money, spending the money, but it doesn't limit growth. So could you talk a little bit about, if an organization was interested, how you want a business plan, obviously, but some of us may have no experience like really making a business plan to your standards. Could you talk about the process of setting an idea?
Sure. So, I mean, the first thing I'll say is like, my door is open. Like, you can always just reach out to me, and I'm happy to talk to anybody. And that's not, that's no cost. Like, I'm happy to discuss anybody's ideas or thoughts. And so short answer, if you're interested, don't hesitate, reach out. I'm happy to talk more about it. And the other thing is like, we do kind of we're not going to go through people's business plan with like a red pen, and you know, our job is not necessarily, we always want to like help people connect with those kind of resources. If they need help with business plan or revenue planning or so forth, happy to sort of play a role in that. We're not gonna like, it's sort of like 2 stages or 3 stages, I guess. I'm sort of the front line where it's like, let's have a bunch of different conversations. I'll tell you more about how it goes. You tell me more about what you're thinking. You know, like if we get to the same place where I'm like, yeah, great, you've convinced me that what you're doing seems workable and smart, and you feel good about us, then the sort of like the next stage is we meet with the attorneys, we meet with the other folks. And again, this is all free of charge. Like, if this is figuring out if it's a good fit or not. And then, you know, they ask you questions, you ask them questions, things like that. We have another round of getting to the point where you feel good about saying yes or no. And it's kind of like, have you convinced them? And convincing them is not necessarily, here's my amazing 30-point business plan. You know, it's more about like, can you demonstrate that you are doing something that seems like it has a reasonably good chance of succeeding? And we want to vet those things for probability of success, because obviously, like we don't want to create situations for people to fail. We don't want to set up the community to invest and participate in things that aren't going to work. So we're going to vet it to a certain degree, but this is not like about your business plan so much as is it a in a formal sense. It's about your business plan in at least an informal sense, but it's less about like how professional your business plan is and more if it's a solid idea. And so if you've convinced us, then again, it's about convincing the community. You know, like we're going to screen it because we want to put good stuff on the platform, but it's ultimately boils down to, can you persuade the community it's a good idea and then deliver on what you said you're going to do?
And Andrew, adding to that too, from a couple of the previous conversations and interactions that we've had, you know, I know that Andrew and his team and the folks he works with are really good too at not, like he mentioned, not sort of vetting, even just vetting your idea, but just helping you think through, is this doable? Is this possible? How might we frame this? I know he's got some, just using some data from bank deposits. You know, this is something he shared with me before of bank deposit data in communities. He can sort of capture, well, how much idle capital exists in a community. So you may be in Malta, Montana, and you're saying, well, you know, I can't raise that kind of money here. Well, we can actually look at the data and say, well, actually, there's X millions sitting in the bank in banks in Malta, Montana that's sitting idle. Therefore, we think this project is worth it. So yeah, I think he's a good resource just to sort of ping some ideas off of.
I hope if anyone on the call here is from Malta doesn't feel like we're singling you out.
That was just an example. Absolutely, just an example.
Who else has questions? Or and I'm sorry, your name is showing up as Adam Jesperson, so I don't know who I was just talking to.
Mostly me, I think.
Yes.
Most of the questions were mine.
Yeah. What's your actual name?
Elizabeth Williamson. Yeah. And I can change it right now.
And Andrew, there's a question just for your contact information.
Sure, I will put that. You can go to our website and get me there, but I will also put my email address in the chat.
And when I send this recording out to everyone, I'll include Andrew's contact information. In fact, I'll probably CC him on that email.
That'd be great. And I really do want to emphasize that anyone should feel free to reach out to me at any time. Like I am available. And whether it is for you or your organization, or if you have a business or another organization in your community that you think might be interested, like this is what I'm doing. I'm happy to talk people through ideas, see what work. So. And I just chatted my email address as well.
Do you know yet how the state kind of perceives these kind of, because I know we're kind of a small business positive state in terms of, you know, being kind of Republican leaning and kind of wanting to support these kind of ideas. So I'm just curious if there's been any intersection between the Center for Community Ownership and the state as a grantor, like small business.
Oh, like have they supported this project or anything like that? Is that?
Yeah, or just like I could see, you know, if you're doing a small business grant or with the state, and then have this Center for Community Ownership kind of, you know, kind of a portfolio of generating revenue for this idea. I just curious if you had engaged at all with the state.
Yeah, I've talked to folks in the governor's office, and they're supportive of the project in spirit. And I think that part of what I always say to people, whether it's community ownership projects or the sort of Crowdfund Main Street Montana project, like I'm also happy to work with folks to seek money from the state or from other, economic development organizations or whatnot. If the fees are a barrier, like I want to help make that work for people. We've tried to price them as low as low as we can to like just cover our costs, but we know that it's not like free. We know that budgets are tight. So we want to help work with people as much as possible, whether that's helping get money from the state to support things or not. But yeah, generally speaking, I'd say like my kind of mindset with things in general is to like prove out the work a lot first before asking. I'm more interested in demonstrating a track record of success and then having the state kind of come to us to say, hey, this is great, we want to support it, at that point when we have sort of more to show for it. So that's certainly, but in spirit, they are totally on board and they think it's great. So Carolyn, did you have a question?
Yeah, I did. Thanks, Andrew. Do you have an ideal project size or a size that you'd like to keep it in the range of?
So like I said, the minimum threshold of about 100,000, and then because of the crowdfunding legislation as it stands currently, entities can only raise up to a little over $1 million in a 12-month period. So if you have a project that's bigger than that, you would either need to phase it over, a couple of years, or, if it's 1.2 million and you can find some source of capital for 300,000 of it and then raise the other 900,000 through, crowdfunding, then that's possible. But generally speaking, that's kind of the limits for it to be like a one-shot go is basically between 100,000 and $1 million.
Great, thank you.
Yeah. Any other questions out there?
I'm not seeing any. Well, Andrew, I don't see any of the questions. Thank you for being here. As I mentioned, Center for Community Ownership is a newer member of MNA. We're glad he's here, glad the center's here. They're doing stuff nationally, but they're right here in Montana, which is always a fun success story to highlight local organizations. We had somebody in the chat say this is good food for thought. I think that sort of sums us up. This is just another option for organizations as they try to figure out, how do we fund our mission? How do we move forward? How do we expand? How do we grow? Do the things we want to do? So this may be a fit. Andrew is very gracious with his time and expertise, and I know he'd be very glad to hear from you. And we will be sure, as this platform kicks off and starts gaining some speed, to make sure to bring him back and highlight it again.
Yeah. Oh, and one other thing that I do want to say, I'm working on actually putting together a survey for businesses and organizations to sort of gather some information to tailor what we're doing a little more effectively. Adam has been generous enough to offer distributing that survey. So in a week or two or a few, you might get something from Adam from me via Adam. And if you would be so kind as to fill that out, or please distribute it to other organizations and businesses. I would love to get as much input as possible, because forever trying to get a handle on exactly what the capital needs and realities are of businesses and organizations and the situations they're facing, so that we can help fill those holes as much as possible. So yeah, please do that. And thank you all so much for coming today. I really appreciate your time. And please reach out, anybody, whatever. Always happy to talk.
Thanks, Andrew. Thanks everybody for being here.
Thanks, everyone.
Bye.
Thanks,